Dear ICCS members and friends, good afternoon and thank you for joining us for this informative session about the Singapore Budget 2021. My name is Carola Capone and I'm the Marketing Executive at the Italian Chamber of Commerce in Singapore. Today's presentation will be done by Salvatore Di Chiara and Matilde Gini, both from ICCS supporting member Oxford, which I thank for the organization of this webinar session. Before leaving the floor to both of the speakers, I would just like to remind all of you that we will have a Q&A session at the end of the presentation. So feel free to type in any questions in the Q&A button below. And for those who cannot attend the webinar till the end or would like to review this session, we are going to upload the recording on our website. So just feel free to go on our website after that and you can either download the recording or the presentation. Thank you, everyone, and I shall now leave the word to Salvatore. Thank you.
Thanks, Carola, for the introduction and for organizing this webinar. Good morning and good afternoon to everyone. My name is Salvatore Di Chiara, and I'm the head of the account management department in Oxford, Singapore. Today with me, there is my colleague Matilde Gini, and today we're going to be going through all the main highlights of the budget that's just been announced last week on the 16th of February by the Deputy Prime Minister. Before starting our presentation, let me do a little bit of housekeeping. Let me introduce our company. We are a corporate service provider. We help international and Italian clients to set up companies in Southeast Asia as well as China. We do help companies with setting up the legal entity as well as running the operations in Singapore. So we help with tax, accounting, HR, payroll, and immigration. We also have very nice websites where you will find a lot of information about how to set up a business in Singapore. We also have a lot of other information non-related to business, so quality of life in Singapore, how to find an apartment in Singapore, for example. We call it a little bit of a Wikipedia about Singapore, and I'll just leave the website here on the presentation. So without further ado, let me start with the agenda of today's meeting. So as you know, the budget was announced last week on the 16th of February. And today we were going to be covering a little bit more about what is the economic snapshot now in Singapore and how will the economy look like in 1 year. And then what are the main support that are being given to businesses and workers. And Matilda will guide us through the extension of the job support scheme and improving worker skills in Singapore. And then I'll take again the word back to talk about what is probably the most interesting part of this year budget. This is the industry transformation map. And then we will finish it off with some of the tax measures that have been announced. And then we will leave the floor to all of your questions. Please don't be shy. Just ask us any question that you want in the chat box tool. So let's have a look first at what is the economy is looking like now. And as you know, the COVID-19 and last year we had the biggest recession since 1929. I just wanted to put some graphs on these slides to show you what was the impact of the viruses on the Singapore economy. And if you start from the left-hand side, the real GDP declined by 5.4% in 2020. And we need to bear in mind that last year, the economical policy of Singapore was very expensive. This could have been way, way worse without all the support and help given by the government. There is a statistics by the Ministry of Trade and Industry that says that the decline in the global GDP could have been as worse at 8 to 9%. If we look at the second graph, though, we can see that, of course, the economy was deeply and very hardly impacted in the second quarter. So in Q2, of course, we all know that in Singapore, we experienced the circuit breaker. So most of the activities were shutting down and the economy slowed down by 13.3%. But then if we look at the path of the graph, we can see that since then, there has been a steady growth. And this growth is also expected to be continuing in 2021, hopefully. And in the last graph, I just wanted to show you which sectors were the one positively affecting and negatively affecting the GDP. And despite the pandemic, it is really interesting to see that manufacturing, finance and insurance and information and communication were actually positively contributing to the growth of the GDP, growing even during a period of recession like last year. So let's have a look at what is the economic outlook in 2021. So the government is expecting 4 to 6% growth in the economy. However, we are expecting GDP to go back to the pre-COVID-19 level not earlier than at the end of next year. Of course, different sectors will recover with different speeds at a different pace. Of course, travel-related sector will experience slower growth in next year, but there are some sectors like manufacturing and finance that will keep growing, and the economy is quite optimistic about it. In the long term, and then we will see also in the budget where are the measures that have been announced. Singapore government is strongly investing in enhancing its position as the main hub and a Asian node in Southeast Asia. So let's now deep dive on the what are the main measures introduced in this budget. And I mean, the first things we need to notice is that the approach on this budget is completely different to the one we saw last year when we had 4 different budgets that the government released and announced. This year budget was more focused on the long term rather than helping sustaining companies in the short term. This can be seen, of course, as a positive sign, because this means that the government thinks that the economy is able to recover on itself without a very strong and expensive economic policy. But of course, on the other side, there will be some sectors that will still be deeply impacted. So the government announced the COVID-19 resilience package, where they decided to set aside 11 billion Singapore dollar. If we think about this number, 11 billion, this number pales compared to last year, where the government set aside 100 billion Singapore dollar. That if we put it in perspective, it's 20% of the Singapore GDP. But so of this year, in this year budget, this 11 billion will be allocated to 3 main pillars. The first one, of course, is public health and safe reopening. For the government is key that as the economy will start again and will keep growing, it's important that we can keep the economy safe. The second pillar is instead what are the support for businesses and workers. And my colleague Matilda will guide us through all these measures introduced. And I will quickly say that, as you all know, there has been an extension of the job support scheme. There is a scheme that really helped companies last year to retain workers. There is a continuation of the Singapore United Skills Package. These are all measures that have been announced last year to help Singapore workers to improve new skills and new talents. And then, of course, there will be to facilitate credit access for local firms. This is important. There is also the extension of the temporary bridge loan scheme. And then there are also some grant that will be given to Singaporean. Also, they will only target Singaporean who lost their job, who are encountering a lot of difficulties in this year. And then the last pillar is the support for specific sector. As I said before, some sector will still suffer, like I'm thinking about the aviation, the tourism. And so the government is setting aside some specific and targeted incentive only for this sector. So for the aviation, for the taxi industry, so there is this driver relief fund that will be given to taxi drivers. And then, of course, to help sectors like arts, culture, and sport. I would now like to give the word to my colleague Matilda, and she will guide us through the support for businesses and workers, and then I will take back the word. Thank you.
Thank you, Salvatore. Thank you very much. Hello, everybody. Thank you for joining this webinar. So as anticipated by my colleague Salvatore, I'll be talking today about, let's say, the two main, one of the two main topics of these budgets. So I'll be talking about the support to businesses and workers. And towards the end of the webinar, I'll be talking about the taxation. So now I'm going to start with the support to businesses. And If you have followed our previous webinars and if you already know something about the Singapore government budgets, you may know that one of the most important measures that the government has implemented to help businesses is the job support scheme. Basically, with this scheme, what the government does is the following. The government co-funds the employees' salaries for a certain period of time. So in 2020, since the COVID-19 outbreak, they started co-funding the salaries with different amounts and percentages according to the period of time and according to the sector of the company. Of course, sectors like aviation and tourism that were more affected by the COVID-19 outbreak were more supported by the government. For this year, for 2021, the job support scheme, so this co-funding of the employee salary will continue, and the percentage and the way the government is going to co-fund these salaries depends from, again, this year depends from the industry of the company. So basically for the tier 1 sectors, such as aviation and tourism, which, as I mentioned before, are more impacted by the pandemic. This job support scheme will be extended by 6 months. So these businesses pertaining to these sectors will be receiving 30% of support for their employee wages for the month of April, May, and June. And after that, for the following 3 months, so from July to September 2021, the support, the co-funding of the salaries from the government will be only 10%. For the tier 2 sector, so retail, arts and culture, food services, so I think the industry that you are more interested in, this job support scheme will be extended only by 3 months. And these businesses pertaining to these sectors will receive co-funding of the wages of their employees from the period from April to June for 10% of their wages. And then we have the tier 3A sector, which covers all the other companies that are not included in the first 2 tier sectors. And for these, the extension will be until March 2021 only. Salvatore, please, the next slide. Okay, so another one of these important measures to help businesses implemented by the Singapore government since 2020, and that's going to be extended so this year, is the wage credit scheme. So basically, with this scheme, the government wants to incentivize businesses and employers to increase the salaries of the workers. So with this goal to incentivize them to increase salaries, they co-fund part of this increase. And this scheme has been extended by 1 year. So this scheme started in 2020 after the COVID-19 outbreak. And it's extended now by 1 year. And the government will be co-funding 15% of the gross salary of these employees, but there's always a cap of 5,000 Singapore dollars. Next slide, please. So this is the third, and let's say one of the most important measures to incentivize businesses in Singapore to hire locals, so Singaporean citizens and PR. So basically, businesses in Singapore this year, they hire local employees below the age of 40 years old. They are going to receive the 25% of co-fund of their salary for the next, so basically until September 2021, but this can be extended up to 12 months. Instead, if businesses hire local employees, hire Singaporeans aged 40 and above, or people, Singaporeans with disabilities, this co-funding will be up to 50%. and it can be extended until 18 months. So it can go more than after September 2021. So it's going to be, let's say, longer, this co-funding. And the cap of the salary with this last budget was increased from 5,000 to 6,000, but only for employees over 40 years old. Now I'm going to leave the word to Salvatore, that's going to be talking about the industry transformation map, and I'm going to be back later with the taxation part.
Thanks, Matilda, for going through what are the main support for business and workers. And of course, if we look at today's this year budget support is not comparable to last year, as I mentioned it before. So the government will still sustain the economy, but the approach has been completely different, and they now want to support only sector that have been deeply affected by the economy without giving money to everyone, basically. And as I mentioned at the beginning of my presentation, also the focus and the approach has shifted from short-term and immediate support of the economy to long-term support. And in this regard, I would now talk about what is the most interesting, probably, set of measures that have been announced this year by the Deputy Prime Minister. It is the industry transformation map. So what the economy, so what the government will do is to set aside 24 billion Singapore dollar in the next 3 years to help the economy transform and adapt to the changes that have been actually occurring in Singapore and all over the world because of the COVID-19 pandemic. So the government identified three main, they call them enablers. So three main areas where Singapore has to focus in order to be able to adapt to changes in the global economy and also being ready also to start growing again. So the three enablers that have been identified are try to grow a vibrant business community, and we will see now how in the next slides. And then a very important key element is to catalyze a wide range of capital for companies in Singapore. And then finally, as we all know, COVID-19 affected the way we are working now. You can work from everywhere in the world, so also try to create opportunity and redesign jobs in Singapore. So let's now have a look at how the government is looking to grow a vibrant business community. And we can identify two main areas in these enablers. The first one is really important, and we all know the importance of the strategic location and geographical location of Singapore, and is restoring physical connectivity and transform the aviation sector. So Singapore, of course, is doubling down on the reopening of the Changi airport, and to do so, it will be really, really important to invest in on-arrival testing. So this has to be reliable and quick, and then invest in biosafety systems also to verify the authenticity of digital COVID-19 test results. This will be very important, not only for the safety of Singapore, of course, to let people in Singapore that we are almost 100% sure they are not infected, but also to improve the perception of Singapore as a safe place for other business to move and to do business with. And in this direction, it has been announced also this, I think a very important initiative, that is the Connect at Changi. What this is basically what Singapore is trying to put in place is to allow business travelers to stay and conduct meetings in Singapore without the need to self-quarantine on arrival. The way it will work is that the Singapore government will allocate some hotels room within the airport for business travelers to stay there, and then they will use dedicated facilities at the expo in Singapore, where people will be able to conduct a business meeting without the need to do and serve quarantine in Singapore. I think this will be very important. Of course, it will depend on what possible green lane and corridors can be activated with other country. We all saw that the the bubble that was put in place with Hong Kong didn't work out. So it's not just, of course, on Singapore, but I think this initiative could be really important. It could allow at least they are predicting thousands of people meeting at the same time at the Expo facility. The second area that the Singapore government identified to try to grow a vibrant business community, of course, is to create new platforms for nurturing creative ideas. And in this regard, there are 3 platforms that have been now that will be implemented. The first one is the Corporate Venture Launchpad. Thanks to this platform, the companies will be able to access co-funding in case they want to rekindle a startup organization within their company. And this will be done through partnership with other management consulting and digital venture. For example, BCG Digital Venture was the one that the Ministry of Manpower talked about. The Ministry of Finance talked about during the budget announcement. The second platform is the Open Innovation Platforms, and within these platforms, business will be able to be connected to government agency or other local firms that need solution providers for certain needs. So in this platform, there will be a business matching between the problems that are faced by, for example, government agency with the solution provider. And the last platform is the Global Innovation Alliances. This, of course, will help companies to catalyze cross-border partnership between Singapore and major innovation hubs globally. Of course, Singapore, as we know, is quite a small economic, and so they are doubling down again on the connectivity and the interaction with other hubs in Southeast Asia. The second enablers is to, of course, try to catalyze a wide range of capital. This will help, of course, Singapore company to grow even further and being able to look not only the local market, but to look overseas. I would like in this slide, I included a graph where that include what are the different scheme and incentive and initiative that have been introduced that are available for companies that, of course, are in different development stage of growth. So for high growth enterprises and startups, the government is launching this enterprise financing scheme where the government will be able to share the risk of some investments and financing available to these companies up to 8 million Singapore dollar. Of course, the risk of this company are way higher than the risk of large local enterprises. The second, for mature enterprises and to help them do a step further, so to go to the next level, the government introduced 2 initiatives. The first one is Emerging Technology Program, where the government will be able to co-fund the cost of trials and adoptions of what they call frontier technologies. It means the adoption of 5G, artificial intelligence, machine learning. So to help companies switch and try to implement this kind of technology, the government will co-fund part of this cost. And then the second initiative is what they call the CTO as a service initiative. Thanks to this initiative, the government will be able to co-fund and to help companies to find the right CTO, so the Chief Technology Officer, to appoint within the company that can help them to go to the next level. And then for large local enterprises, and I think this is really interesting, the government is going to set up a fund where they're going to put 500 million Singapore dollar for non-controlling equity investments in large local enterprises. And on top of that, Temasek, this is the sovereign fund in Singapore, will top up with additional 500 million Singapore dollar. The scope of this initiative is, of course, to fund and larger local enterprises that are now able and ready to go and grow overseas and not just in Singapore. Let's see how this platform will look like when they will be actually implemented. If you want my opinion, I think the government is really investing a lot in helping local companies, of course, not foreign companies, to grow and co-fund some of their initiatives. There are a lot of platforms out there, a lot of initiatives. In my opinion, probably they could have done a one-stop solution platform where companies do not need actually to go and meet several partners and meet several local agencies. But regardless, I do think that this will really help the economy transform in the future. We're not looking about this year or next year. Singapore is now looking in a, let's say, in a Chinese in a Chinese way approach to 2030. So we are not looking at this year. And then the last enablers that the government identifies, of course, to create opportunities and redesign jobs. In order to do so, and let me do a brief introduction about the unemployment rate in Singapore. I mean, due to the pandemic, Singapore reached almost 4.2% unemployment rate. This can seem very low if we compare it to the Italian unemployment rate or other countries across the world. But for Singapore, this is the all-time high. So the government is really trying to invest in creating, on one side, creating new opportunities, but the way they try to create opportunities is not only by incentivizing the hire of new locals, like Matilda said before, the jobs growth incentive, but most importantly, to try to build new skills for the Singapore workforce in order to make them more likely to be hired also by foreign companies. So in this regard, there are a bunch of initiative and programs out there. The most important one is definitely the Singapore United Skills, and this will help company and employees who wants to upgrade and learn new skills to attend courses that are co-funded by the government. I'll now like to give the word back to Matilda to talk about taxation and incentives. So Matilda, please.
Thank you very much. So as I mentioned before, I'm going to be talking now about taxation. So I'm going to talk a bit about corporate tax, GST, and personal income tax. So in this slide here, you basically can see that the most tax revenue of the Singapore government, so mostly around 54% comes from individual income tax and corporate income tax. So it's more than half of the tax revenue of the country. Salvatore, please, the next slide. So now I'm going to be talking about the corporate tax. So unfortunately, on the corporate tax, there are no additional incentives, let's say, with this budget. So the tax rate for corporates, for businesses, will remain 17%. But as you may know, the Singapore government is always very committed into helping startups, so new companies, especially in their first 3 years of life. So basically, we'll continue having the tax exemption scheme for new startup companies also from this year on. So under this scheme, basically the government gives the government added this exemption of the first of 75% of the first 100,000 Singapore dollars of normal chargeable income. So basically startups in their first 100,000 Singapore dollars of profits of chargeable income, they are taxed only on 25,000 Singapore dollars. So only on 25% of that income. Instead, for the following 100,000 Singapore dollars, the exemption is 50%. So basically, in this second part of the income, so in the following 100,000 Singapore dollars, only 50,000% will be taxed at of course, the same rate of 17%. In addition to this tax exemption for startups, we have also the partial tax exemption for all the other companies. And this exemption works basically in this way. In the first 10,000 Singapore dollars, companies are exempted for 70% 5% of this amount of chargeable income. So in the first 10,000 Singapore dollars of chargeable income, you'll be taxed only in 2,500 Singapore dollars with the same rate of 17%. Instead, in the next 190,000 Singapore dollars, the exemption is 50%. So only 95,000 Singapore dollars of chargeable income will be taxed at the flat rate of 17%. Now we're going to be looking at some of the, let's say, most important incentives that were added with this new budget. So basically, these three incentives that we have listed in these slides have the goal to help those companies who are in profit to maintain the more possible their cash flow. So what does this tax measure say? First of all, they are temporary, so they're not gonna be very long in time. The first one is the enhanced carryback relief scheme. So what this scheme says is that basically companies can use their they can carry back their non-absorbed capital allowances and losses, and they can use them to deduct the income up to 3 years. Before it was just 1 year, so now you can use them for 3 consecutive years. But as always, there's a cap of 100,000 Singapore dollars for this measure. The second one, which is always, let's say, connected to capital allowances. So this measure says that basically, if you have incurred expenditures on plants and machineries during the year, you can, let's say, accelerate these capital allowances in just 2 years. So you can use 75% in the first year and 25% in the second year. The third temporary measure to help companies with their cash flow is this option to accelerate renovation deduction. So basically, if the company has incurred renovation expenditures during the year, they'll have the possibility to deduct them over just 1 financial year, not 3 financial years as it was before. So of course, this helps to, let's say, increase the costs in the year. The second point that I'm going to be talking very quickly is the GST. So there have been some changes also for the GST. Actually, before it was planned to increase the GST rate for this year, but it's going to remain the same, and it can be increased in the next years, maybe between 2022 and 2025. So for this year, it's going to remain 7%. But there have been some, let's say, news with the GST with this budget. So basically, the GST will be after this budget will be extended to low-value goods, and with low-value goods, I mean those goods who are imported via mail or post, and they are valued under 400 Singapore dollars. Before, the GST was not applied to these goods. From now on, it's they're gonna apply it also on these goods in the future. And the other extension is to non-digital imports, so non-digital services that you're buying from abroad. The GST will be applied also to these services, and of course all this with the goal to help Singaporean service and goods sellers. These are the main points, let's say, about the GST. Let's see quickly the personal income tax quickly, because there are not substantial changes. Actually, there's no additional incentives, but there's no limitation either in the rates. So no news, it's like a good news in this case. The only change in the personal income tax is there's not gonna be any more the personal rebate. And yeah, there are no more changes on this. In this last slide, we wanted to make a comparison between the let's say the major countries on the taxation rates, and as you can see, Singapore is one of the countries with the lowest taxation rate after Hong Kong, of course. So this was all on taxation.
Thanks.
I know it was very quick, but if you have further question, you have my mail address and number, so you can just contact me and I'll be super available.
Yes, thanks, Matilda, for going through the tax announcement in this budget. And again, if we compare it to last year, the number of announcements and the magnitude is definitely non-comparable. Last year, we saw there was a personal tax rebates given to employees, and there was also the possibility to delay the payment of taxes. There is nothing like this in this year. So could the government have done more? Probably yes, especially for foreign companies and especially on the corporate tax matters. We also saw a reduction in the startup incentive, and the startup exemption. So of course, we need to bear in mind the last year's budgets. It was something unprecedented, and they withdraw so much money from the capital reserve. And this year, the economic policy could have not been that much expensive, I would say. Is there something missing in this budget? Yes, definitely. Also, the allowances, the capital allowances extension that have been given, as Matilda mentioned, these are only incentive for companies who are profitable. If you are not a profitable company, you will not benefit from this incentive. So what we are seeing now in the government's approach is also to move from tax-related incentive to non-tax-related incentive, like the one included in the industry transformation map, where they are co-funding new initiative. But as Matilda said, sometimes also no news is a good news, because someone was expecting an increment on the taxation, on the personal taxation, especially for higher income employee and foreigner. And this has not been done because, of course, Singapore still wants to keep its position as a very favorable tax regime. But we also need to bear in mind that Singapore is, of course, is not in the blacklist anymore, but it's on the verge of being considered a blacklist country if we look at the effective tax rate compared to the effective tax rate of other jurisdictions, for example, in Europe. So there is also not that much margin to lower income taxes in Singapore without having to incur in other consequences. So to wrap up a little bit the discussion of today, of course, as I mentioned, this budget aims at a balance between the short-term and the long-term economic objective of Singapore. The vast majority of the money have been set aside to transform the industry with the industry transformation map, and then, of course, trying to accelerate the upgrade skills and talent of local workforce compared to foreign workforce. And in this regard, we did not include a slide on immigration, but there have not been significant changes, at least publicly, about, for example, introduction of quotas for employment passes. So this has not been done. So employment passes application in Singapore are still not subject to quota, but there will be an increment and for S-Pass application in the manufacturing industry, whereas you will need to have more locals in order to apply for one S-Pass. And again, this measure is, of course, towards, there is also some political implication. We also in the election about the perception of foreign workers in Singapore. So I would now, honestly, I would now like to give the word to you and leave the floor to you for any questions that you might have. We'll try to answer all of them now live. If you don't want to ask a question now, just send us an email. In the next slide, you will find all of our details. So I can see we already have one question from Alberto. How friendly is this budget to new business from abroad? Will budget 2021 attract new FTA? As I mentioned before, this particular budget is not so oriented on helping foreign companies stepping into Singapore unless you look at on the specific sector in which the Singapore government want the economy to invest in. And we saw this also with the introduction of the tech pass, for example, introduced by EDB Singapore. So with this pass, tech company will be able to bring their executive in Singapore in a more in an easier way than applying through employment passes. Of course, there are really strict requirements to apply for this. So in this regard, I would say the political side of it is very important. I think the government is really focusing on the local economy first, knowing that it is important for them to improve FDI and in Singapore, but this will be more done through the platform I was talking before about the collaboration and the global innovation alliances with other countries. But in terms of taxation and other incentives, this is something that I don't know if it has been overlooked, but it was not the main focus of this year budget. And then there is another question from Alberto. Can you elaborate further on the industry transformation map? Is there any specific sector which will attract FTA? In terms of specific sector, of course, Singapore is investing in all the technology, data, cybersecurity. And in this regard, what I think is really interesting, even though I don't think was that much relevant for this presentation, is the focus on the possibility the government will also issue what they call green bonds. So they are investing a lot of money in the green economy, trying to develop. There are incentives for Singaporeans who want to buy electronic cars vehicle. There will be a lot of new installment of let's say towers for the recharging. So in this regard, the green economy is the one where the government is focusing more in the long term, like everywhere in the world, of course. But then Singapore wants to position itself as the main place in Southeast Asia for all countries to come and say, I want to develop new technology, and I want to take advantage of the green bonds, for example, in Singapore. We have another question from Giorgio. Yes, it's exactly what I was mentioning about the green bonds. So the government announced that it will issue green bonds for 19 billion. Will Singapore become a regional center? Yes, this is the idea of the Singapore government, to place itself as the regional center for and to attract investments and companies. And in this regard, I think more than on the taxation side, the EDB, so the Economic Development Board in Singapore, will do most part of the job in trying to help foreign companies that want to place research and R&D center in Singapore, and they have a lot of schemes that can help co-funding up to 30%, for example, of the operational cost of a regional of a R&D center in Singapore. To access this scheme, of course, you will need to have, these are not publicly available schemes, so you will need to have a one-to-one conversation with EDB. Of course, if someone is interested, we can absolutely help you to reach out to them and prepare all the documentation to access this kind of incentive. But all these incentives are tailor-made to the need, but more importantly, to the scale of the investment of the project that the company wants to carry out in Singapore. George, I hope I answer your question. So we have another question by Roberto Colanzi.
Yes.
Are the fiscal budget assumption realistic given COVID and the post-COVID situation? I mean, we don't have the crystal ball, of course. I would say yes. If we look at the experience of China, I think this is what the Singapore government is betting on. Singapore is now experiencing almost 0 cases of COVID-19. Most of the economic sectors are recovering. Most of the activities reopened. If you look also at the measure, there are also some industry in which not setting out and is not putting any funds and any support. I'm talking about nightlife, bar, pubs. So these are sectors that have been left behind by this budget and by the government, and I think this is a strategic choice of the government. But in terms of realistic growth, maybe 6% is a bit optimistic, but I believe a 4 to 6% growth could be actually possible. We have another question from Gianluca Anguzza. So our company is based in Singapore. I think there is a typo. In 2021, we will need to invest in an innovative smart lean academy that will be hosted and managed together with ITE. We will in high-tech solution aim to fit training on the digital transformation. Are there opportunities of funding by the government? Yes, Gianluca. There are opportunities, of course. As I mentioned, there are not specific schemes available to all companies. You will need to talk with the different agency, and this is what I was telling before. What the government probably has overlooked is that they put so many platforms and so many incentives, and they could have put a one-stop solution, a one-stop solution for companies. You can, unfortunately, most of the incentive, and if we look at, for example, the productivity and solution grants, if we look at other incentives given by Enterprise Singapore, all of these incentives are only targeted to local companies. What this means is that you need to have at least a 30% shareholding that is held by Singaporeans. So a lot of these incentives are not honestly available for any company unless the scale of the project is this big that it can be interesting for EDB. So then we can have separate conversation for EDB and Enterprise Singapore about this. But then this is a direction in which the government is investing a lot, and a smart lean academy is something that or the government has showed so much interest in. So I think it can be useful to further elaborate this with EDB and Enterprise Singapore. But in terms of this budget, I don't see any new incentive given.
Thank you, Salvatore. I think there are no more questions. But just give. Let's see if we.
Yeah, let's wait a couple of minutes to see whether there is new questions.
And in the meantime, I just wanted to remind everyone, because someone wrote me personally to my chat here on Zoom. Yes, the slides and both slides and presentation, so the recording, are going to be uploaded on ICCS website under our event section. So don't worry, if you would like just to go back and have a look at what we have discussed today, you will find everything on our website by today and tomorrow. Just the time to cut and adjust a little bit the recording. Okay. Well, I think there are no more questions, also because I think the presentation has been very, very clear. Thank you once again, Salvatore and Matilda, for giving us this opportunity and for having this insight about Singapore Budget 2021. And thank you once again, everyone, for joining us today. I hope you enjoyed. And thank you, Oxford, and of course, ICCS members for being our partner for such event. Thank you, everyone, and have a nice evening.
Thank you.
Thank you, Carola. Thank you, everyone.
Bye for now.
Have a nice afternoon.